Good morning, everyone. Welcome to Tuesday's crypto and financial news roundup, where things got pretty wild over the past 24 hours. Bitcoin briefly dipped below $84,000 before bouncing back to trade around $87,000, and the Fear and Greed Index is sitting at extreme fear right now, which historically has been a decent contrarian signal. Interestingly, Bitcoin supply on exchanges just hit a new low, meaning people are pulling coins off exchanges and holding tight despite the volatility. The Federal Reserve officially ended quantitative tightening, which is massive news that probably got buried under all the crypto drama. Michael Saylor's strategy added another 130 Bitcoin worth $11.7 million to their stack and announced the formation of a $1.44 billion USD Reserve while bumping their total Bitcoin holdings to 650,000 coins, so clearly they're not slowing down. Tom Lee jumped in with a prediction that Bitcoin could hit a new all-time high in January, and Vanguard, the $11 trillion asset manager, started allowing clients to access cryptocurrency ETFs today, which is a pretty big institutional stamp of approval. Asia-Pacific markets opened higher after Wall Street declined on the crypto sell-off, and we saw some interesting moves in traditional assets too. Silver absolutely ripped to $58 per ounce, marking a 100% gain in 2025, making it one of the year's best performers. Gold continues to dominate as the best-performing major asset this year, while Bitcoin is now the worst, which is a bit of a role reversal from what we're used to. Japan's 20-year government bond yield jumped to 2.88%, the highest since June 1999, which tells you something about global rate expectations. Average U.S. gas prices dropped to $3, the lowest since 2021, so at least there's some relief at the pump. The Czech National Bank governor said Bitcoin's advantage is its low correlation with other assets similar to gold, which is a refreshingly nuanced take from a central banker. Supermarket giant Spar started accepting Bitcoin and crypto payments in their Swiss app, so you can now buy groceries with your digital assets if you're in Switzerland. The US bond market has been in a drawdown for 64 months, the longest in history, which is pretty staggering when you think about it. Warner Brothers could be on the move with potential buyers including Netflix, Comcast, and Paramount Skydance circling around. Apple's artificial intelligence chief resigned, Airbus stock fell 8% on reports of industrial quality issues, and Kalshi launched tokenized event contracts on Solana, while a whale deposited 10 million USDC into Hyperliquid and opened a 20 times long position on 12,000 Ethereum worth $32.8 million, which is the kind of degen move that makes you either want to applaud or look away. Sony Bank announced they're issuing a dollar-pegged stablecoin in the US. Solana briefly fell under $125, and CryptoPunk number 1925 sold for 195 Ethereum, worth $546,000. The Federal Reserve Vice Chair mentioned that bank regulators are working on crypto stablecoin rules, so we'll see how that develops. That's your Tuesday wrap. Thanks for tuning in, and I'll catch you tomorrow with another update.